morning, everyone. Today is the 19th of December. We are over already, halfway through December. This is basically the last week of the year in terms of trading activity. After that, next Sunday is going to be Christmas, and after that it's going to be New Year's, the week after, right? So usually there's not much activity between Christmas and New Year. Therefore, this is basically the last active trading week of the 2022. Welcome everyone. Today we are going to do the weekly market analysis. My name is Pedro. I'm the senior market analyst at Alphachain, and we are going to go through what happened last week, the busiest week of December, with all the interest rate decisions that went on. However, the market didn't really replicated the expectation of what the traders and investors were expecting in terms of activity and volatility. It was quite almost a non-event. In some assets, in some others, we actually end up having some moves. For example, the indices end up finishing the week to the downside. Dollar got a little bit of strength, but without really momentum. Yeah, just some of a few assets behaved. All the assets behaved last week. So if we take a look at the big week that we had last week, it started with a lot of data coming out as well in the UK, unemployment, CPI, GDP, and so on. But the main focus was for sure on the interest rate decisions, right? At least four major central bankers, from the Fed, ECB, BOE, even the Switzerland National Bank, all of them hiking by 50 basis points. This doesn't mean that everyone is doing the same or is at the same stage, and that was quite notable. Or even Christine Lagarde on last Thursday mentioned exactly that, right? It's not because they are actually at this point hiking at the same rate as the Fed that they are doing exactly the same thing. Fed is decelerating, is reducing the pace. ECB, for example, is not. ECB is going to continue with this pace. She mentioned that, and this is just kind of the beginning of what they are planning to do in terms of increasing the interest rate decisions throughout the next meetings. Aside from the meetings, which, as I mentioned, the market was already expecting these 50 basis points. So at this point, if you take a look at it, we see that in the US, the Fed at this point is at 4.5%, Canada 4.25%, New Zealand 4.25%, GBP, the Bank of England, went from 3 to 3.5%, Eurozone went from 2 to 2.5%, and the Switzerland National Bank went from 0.5 to 1%. By the way, I'm sorry for my throat. I've been struggling a little bit with my voice, so just bear with me during this weekly market analysis. So yes, aside from the interest rate decisions that the market basically was already pricing in, it was about the projections as well that the central bankers were making towards to the future guideline, right? So for the future, what should you expect for the next meetings from the central bankers? And this is where it goes a little bit of the disparity between what the market was expecting and what was announced, and this is where the hawkish tonality comes in place. The Fed, for example, you mentioned that it expects by the end of 2023 to be at the dot plot that they've showcased during the meeting. It's to be at 5.1, above 5, around 5.1, maybe to 5.4, while the market was not expecting that. The market was literally expecting by the end of 2023 to be at around 4.8 or 4.87, something like that. So below 5%, that's what the market has been pricing in by the end of 2023. And then with the expectation of maybe the Fed mentioning that by the end of 2024, it will be maybe at around 4.1. So maybe a reduction of 100 basis points by the end of 2024, which we'll see if it's going to happen or not. However, the main point was on the projection where the rate would be by the end of 2023, because at this point is at 4.5. Therefore, it shows that there will be 75 basis points hike to happen during the next year. If you even take a look at the Fed Watch tool, where we can see the probabilities of the next hikes for the next meetings. If you go around, for example, the next meeting in February, basically 70% is expecting just a 25 basis point at this moment. But if you go around, check in June or July, something like that, there's really low probability, or the market is not really putting too much effort or too much emphasis on the rates being higher than 5%. Right? If you go around, it's not there. It's always really low. It's always in between 4.75 until 5, not really above 5%. And this is something that, let's see if the market actually is going to finally adjust or not to what the Fed's going to do, or if it's going to be playing at their own expectations, which is something that has been happening a lot during this year. The market creating their own expectations. It was a little bit the case back in the bullish rally in the summer, in July, August, until they finally had the Fed Chair Powell having a speech by the 26th of August that was much more hawkish and not in relation to what the market was expecting, and we had a big sell-off by the end of August until kind of end of October, where it created new lows in the indices. So let's see if the market's going to adjust. It took some time. If we take a look at how the market reacted during that period last week, we had a really good CPI data also. That was another big event from last week, Tuesday, and it came out much better than it was expecting. As you can see in here, it came out month-to-month at 0.1 instead of 0.3%, finishing the year at this point at 7.1, right? So that's actually a really good, another good CPI data. It's the second month in a row with a really good CPI data, which is great. And we saw the market moving to the upside in that first instance. However, and as you have discussed during the week, we're not expecting too much of an enthusiasm straight after such a good CPI data, because we knew that there was still the Fed meeting going on and all the other major events going on. And we discussed that last week. We mentioned that we were expecting some kind of control in terms of, if you had really good news from the CPI, we're expecting the Fed to come out a little bit more hawkish, just to have the market under control. And if by any chance, actually, if the CPI actually would be a little bit worse than expected, I think the Fed would come out and say, no worries, it's not as bad as you think, actually everything is okay. I think the Fed in this case would be kind of to put some ice into the situation, just to cool down any enthusiasm, or to warm a little bit the room if it was too cold in that moment. Yes. So then we had the Fed meeting, almost no movement in that moment. The movement started then the day after, right? In the first instance, price didn't really move. This is during the FOMC meeting. Price dropped a little bit, but it stayed almost in the same range until it finally actually had a good sell-off the next days. And this usually happens as well, right? You don't see the market reacting straight away to the news, to the Fed meeting. It may take 1 or 2 days until it actually starts positioning itself to what's going to do next. So there are much bigger actually moves on the indices and actually on crypto space as well. If you take a look at the Bitcoin and Ethereum, there was quite a big sell-off around that moment as well, during the FOMC meeting. And just again, as you can see, the correlation that has been going on between the indices and the crypto space, especially the majors, Ethereum and Bitcoin. And there you go, right? It was quite similar. It was actually a really strong move to the upside in the beginning of the week with the CPI data, and then a big sell-off on Ethereum and Bitcoin, basically trading, getting a little bit close to the lows from the beginning of November. So we'll see what's going to happen next as well on these two crypto assets. Yes, if you take a look at so Nasdaq. So in terms of the indices, yes, Nasdaq, S&P, and Dow Jones, all of them, they had a big sell-off or big move to the downside on Thursday, and continuing with it on Friday. Today they open already a little bit to the upside. This was a few levels that we've been talking about last week, that have been during the morning calls. I mentioned that I was looking for price and the Dow Jones and the other ones to fill some kind of spaces, and this could be actually one of them. Paying attention to, of course, this demand zone where price is reacting for, but I wouldn't mind to see eventually the Dow Jones to fill and get close to this 31,500 level, something that I'll be looking for as maybe a potential target for this move to the downside, with potential even to go a little bit lower. But let's see how price is going to behave from there. This at this point is almost a 38.2% retracement from the highs, right? Since this was in here back in the beginning of October, all the way until last week's highs, we are almost at 32.8%. And I wouldn't mind. Maybe you can have some reaction here, but I wouldn't be surprised if eventually we do get closer to this level. This was the Dow Jones. Another one, of course, is the S&P. Again, another drop that we were expecting. In this case, price actually still respected this move in here to the downside since since the 13th of September. This level at around 4,147, and yes, I could see we had already broken this trend line initially. Price still made an extra fake out before now continuing the same way that price made just a small fake out of this trend line that we have here from the highs of the year back in January. We kind of just made a small break to the upside, and then the sell-off that occurred straight after that. If this is a tool that you like to use in order to predict the direction of the market, that's exactly what happened. A small fake out in there of this bearish trend line that you can see here, and price fake it out, and finally it's moving down there again. It was a level that we also were looking for last week for price to drop to. But yeah, now reassessing again. Let's see how price is going to react somewhere from this demand zone, and if the resume to the downside is going to continue or not. There are a few key levels in here that you need to be paying attention to that can work now as something that works as previous support, may work as now resistance in order to continue to push the indices to the downside. Pay attention to this level in there as a next potential zone to react from. With the target, of course, there's even a potential to go all the way maybe back to the lows to test maybe this 3,600 level. 3,700 can be also important. So we'll see. Just keep an eye on it, right? And remember, it's the last week of the, not exact last week, like 2 weeks away from New Year's, but it's going to be basically the last active week of the in terms of trading, and how much actually the institutions are willing to put too much risk into the market at this point in terms of position themselves or not, or are they going to kind of slow down, wait, and maybe starting to reassess for the new year and just jumping into the market again back in 2023. So expecting maybe a little bit of low volatility it's something that usually occurs around this time of the year, close to the holiday season. The Nasdaq a little bit kind of the similar way. We actually broke a little bit the highs, but this is now the level that I was looking for, right? So this was during the CPI data back in November, when you had the first really strong CPI data coming out, or in a positive way. And this is where I'm looking for price to go to before maybe continuing to go and resuming the move to the upside. We'll see how price is going to react somewhere in here around 11,000. Again, we have now a few barriers in here that can hold price to the downside as a continuation move. So it's going to be interesting to see what's going to happen within this within next week. Destination for me, I'm looking for price to go a little bit farther down at this point before maybe starting to go higher with a few barriers that I could see price using in order to continue that move to the downside on the indices. Yeah, this is basically how the indices behaved. All of them quite similarly. Strong move up during the CPI. They paused just after that. They basically closed the day on the CPI of that strong CPI data. They basically closed at the same level where they opened. Then you had FOMC indecision, and then the sell-off the day after that, and the 2 days after that. Yeah, that's basically what we had in there. In terms of the calendar news, that was out on Wednesday, and then on Thursday, of course, we had ECB and BOE as well with 50 basis points, and this is where Christine Lagarde actually was a little bit more hawkish than the tonality of hawkish compared with the other central bankers, and we could see how the euro moved, how the euro pairs moved, how this rally to the upside. This is the euro index. If you don't know, it's an indicator of the strength with the euro currency pairs, and we have been moving to the upside since basically end of August, that we have this rally on the euro pairs, and a little bit similar to what you can see on the euro dollar as well. And yeah, we just reached this high in here, this key level of resistance. This is a supply fresh level in there, which can hold price down for a moment now. We'll see if we do break these levels here. There's a chance you can continue to move to the downside if you kind of respect it, and if price wants to go higher, that can occur as well. But it's a good level that you could see maybe now finally some reversal occurring on the euro area. And the next, if you have noticed during this calendar year, and in coincidence with this ECB press conferences, is sometimes it's around these meetings when you have the euro dollar actually creating higher highs, right? What I mean is, after the ECB press conference, we actually we create a higher high for that moment, and the euro kind of starts falling for the next weeks or months after that, creating kind of a new cycle on the euro dollar currency pair. So let's see if this doesn't occur again after this meeting, right? Since this high was created exactly last Thursday during the ECB press conference. Looking at the dollar as well, the dollar has been going a little bit in a compression move, so there's still no momentum, and this is actually one of my concerns in terms of being so confident in saying that actually that's a really good zone for a reversal on the euro, because I actually like where the euro dollar is reacting at this point. However, the dollar index is still not really showing me that indication yet. And of course, I'm looking at the correlation that there is between the dollar index and the euro dollar at this point. We haven't even broken this high, which is something that needs to be broken as well. And yes, we have kind of this compression to the downside. Price has been moving down. I'm not really happy with where price is reacting in here. I would like to see price actually going a little bit further down, maybe reacting from this level instead, with the potential even to go and take this low and react somewhere from this level. So yes, I wouldn't be surprised if you do create a new low on the dollar index. However, actually like where the euro dollar is actually reacting from in a bigger picture. So yes, there's a little bit of this difference. Dollar index, I wouldn't mind to see new lows being created. Euro dollar actually may like where actually the highs are being reacting at this point. Eventually, we may have this range to be filled. Whenever price reverses, maybe you can have price going out until here, and I'm going to be curious to see how price is going to be reacting at around 109 in order to make decision to continue to go down from here, actually to break and to go higher, or maybe retest the highs of since we had that we have since the beginning of October. So yeah, somewhere in there is going to be a key level for me to pay attention to whenever price retraces there, to see how price is going to react from here on the dollar. Yeah, this is basically what I was looking for. The yen index, there was not really many news last week about the yen. However, they are going to occur this week. The yen actually it's going to have the interest rate decision next Tuesday, if I'm not mistaken. Or is it going to be this night? Yeah, it's going to be overnight. There was already some news going on. There are some reports suggesting that the Japan Prime Minister Kishida plans to revise a 10-year-old accord within the BOG and will consider adding flexibility to the agreement's 2% price goal. Kishida will discuss the matter with the next central bank governor who will take office in April, right? Yeah, furthermore, some more comments from officials this morning continue to signal that the authorities may be considering a policy review in 2023, and more hints are awaited at the BOG meeting tomorrow, right? So, and we saw that's actually the reason why dollar yen opened this yesterday, or opened this week with a gap of almost 100 pips. Because of those news, kind of reviewing the agreement of 2% for inflation. It's going to be important, right? Bank of Japan has been kind of the one that has been almost without taking any decision in terms of policy. They've been passive completely compared with all the other central bankers out during all this year. So it's going to be interesting to see if they are going to change their approach. We saw how the yen was depreciating all this year until they finally intervened, not once but 2-3 times actually, and finally had some reversals and moved to the downside on the dollar yen. So yes, it's going to be interesting to see what's next, what's going to happen next on the yen, if it's going to continue to have now this rally to the upside. So this was the first intervention somewhere in here, and then this was the second, and then the third straight afterwards, and we have that turn. And now we are somewhere in here. In terms of technicals and looking at the charts, this is a key level in here. this demand zone to see if price will hold it and continue to go higher and continue this bullish rally that we have seen since since October, since the 21st of October, or if we're going to kind of reverse. At this point, for me, this key level in here, it's important. We are within this range. Let's see which direction we are going to break first, with the potential to go maybe all the way until here. This is the yen index as well. So yeah. Yeah, looking at the individual, actually looking at this week's news event. So this week, there isn't that much going on compared with last week. There's a few data coming out for Canada, CPI, consumer confidence as well in the US, which it was also lower than expected last time that came out. I think it was 111 last time, then it was 101. And let's see what's going to be next Wednesday. And then I think it's going to be just the core PC on the Friday, the 23rd, just before Christmas. So this is a CPI data that the Fed likes to pay attention to. So let's see how good or bad the data is going to be by next Friday. Aside from that, there isn't that many news event going on this week. Yeah, if you take a look just at the major FX pairs that we like to take a look at. So the euro dollar, as I mentioned, and one of the reasons that I say that I actually like where the euro is because we created this low all the way back in all the way back in the beginning of October, if I'm not mistaken, the end of October. And now what you have is actually a monthly level, right? So we had 1, 2, 3, 4. We had 4 bearish months on the euro, and now we had kind of 3 strong, basically 2 strong bullish months, or 1 really strong November, and we are retesting now this key level in here on a monthly level. And usually monthly levels, they can be quite important, and that's why I'm kind of happy already with where the euro is reacting from. I wouldn't mind to see some kind of reaction to the downside from where we are at this point, and there's a chance that we actually can maybe reverse and maybe fill out this place all the way until here on the euro area, on the euro dollar. So yes, there's maybe a few levels in here that are still fresh along the way. Price can actually still bounce from there as it should. It's normal. However, we may start a new cycle that can lead with price going all the way down to maybe this level, 1022, something like that, retesting these lows back in the 21st of November, or even going a little bit further down, retesting this level altogether. So yeah, this is something that I have an eye on the euro area, on the euro dollar. Yes, I'm aware that we may have still this demand zone. However, we already broke these lows, and I actually think that we can have that move occurring to the downside. That may be a little bit of in this level, but however, this is the target that I'm looking for price to go and retest that zone. So this is the euro. Again, how this move occurred during the ECB press conference, and this is something, again, if you go and take a look at the previous ECB press conferences, and when you had those dates, and if you take a look at the higher highs created on the euro area, on the euro dollar in that moment, this is just as an exercise what I'm going to show. For example, you come here, you check the previous dates: September 8th, July 21st, June 9, April 14. Just check on the euro dollar where euro dollar is and what happened the weeks after that, right? Did the euro started was maybe retracing the upside, and during that meeting we reached a high, and after that you started a new cycle to the downside, like kind of yes or no. Just take a look at these dates and see how euro reacted from, and maybe you're going to see a new cycle starting here again. So yeah, feel free to do that exercise on your own. So yes, this is a key level, of course. If you do break below this level, I definitely can see price going more to the downside. This is just a retest of previous level support resistance. Price one more time basically took the last orders that were in there still at these highs, above this high in here, and I think we can finally break this low and continue to move to the downside. So yes, I'm bearish on the euro at this point, especially if you do break below this low. It's a good level where price is reacting from. It's a monthly level, therefore I'm kind of happy. But as I mentioned before, the dollar index is still not at my favorite place. We'll see. The pound as well, it's another one similar to the euro as well. It's reacting from a good level on the left side, from something in there. In here, we need kind of to, if you break below this level, there's a chance to then feel a little bit more room to the downside. This is a key level in here. So let's pay attention to see how pound is going to react below this low or not. If it breaks it or not, if it continues, there's a chance to maybe feel some of this price as well in here. But for now, we need to break. We definitely need to break this one here at this point. It's a little bit different actually on the pound, because for me the key level and ones on that I'm still looking for is a little bit above it, 124.855, and price didn't really reach there quite yet. So yeah, let's see how pound is going to behave from there. The Aussie, it's another one that, in my opinion, it reached a good level. It's something that we have been talking about, that it hasn't reached before. It reached this week or this last week. The final kind of destination in there for now. And now I'm looking literally for price to fill this range all the way until here, all the way until this low. And then let's see how price is going to react from there, with a chance even to go and to break this level, to go further down. Yeah, let's see what we can expect to happen here, right? And this is something that it's normal. It's normal to occur. We are having this bullish momentum or bearish momentum on the dollar, so it's normal to see some kind of reversal, even if it lasts just 2-3 weeks, and then maybe can resume the move or the overall trend that has been going on at this point. We can go and resume the move to the upside, and that's something that can occur. However, it's normal to have a little bit of a retracement for a couple of weeks, 2-3 weeks, even a month before then resuming, because how this move to the upside has been doing already. It's been lasting already for 2 months, basically since the 12th of October until the 13th of December. It's already 2 months of a move to the upside. So yeah, expecting a retracement, it's normal. It's just normal, something to occur on the FX pairs. The yen, as we've been talking, again, interest rate decision tomorrow to be made, and of course focus on the comments that may occur after that during the press conference. Yeah, so we had a retracement. Price is, I still can see price maybe creating a little bit of a low from this low, but still respecting something in here in order to then continue to the upside. Yeah, it's a different one. It could definitely, yeah, it's curious to see how price is going to behave from doing this level. We have these highs in here. If you do break it above or not, or if you just kind of keep respecting this level and you continue to move to the downside. I think there's a little bit more room to the downside to occur on the yen, instead of just looking completely for the reversal. But let's see what's going to happen, and to get a little bit closer to these levels in here, with even the chance of getting even closer to this level as well. Here, retesting maybe this previous level of support resistance. It is also a chance in there to occur. on the yen. Yeah, what else? We have the USD card as well, super rangy. In here, not much activity going on. This was another kind of prediction that we have been making, that we made last week. Yeah, looking for price to go a little bit higher. We have been talking about that for a while. Price literally just took a little bit these highs and reversed. So it's one of those weeks on the card where price starts ranging a lot without actually getting momentum to go anywhere. And maybe that's a behavior that you're going to have during this week as well. Since maybe people don't really want to put too much capital into the markets during this last week, and maybe wait until next year to reposition themselves for their portfolios. Yes, personally, I think I could still see CAD going a little bit higher before maybe reversal to the downside. So I wouldn't mind to see CAD going a little bit higher, maybe closer to this, a little bit closer to that level before maybe reversing, if that was to occur. Yeah. Dollar franc Swiss is another one that has been in this bearish momentum, literally in this compression move to the downside. We are reacting from this low, which is an important one, especially if you take a look at the daily time frame. It's an important low in here. However, we have just literally this supply level aligned with this previous level of support, now become resistance. And it's a key level in here. Price for me still needs to break above that level before considering looking actually for to a bigger move to the upside. This level in here is still important. Let's see if price breaks it to the upside or not, or it just kind of resumes to move to downside. Bigger picture, I'm still bearish on the dollar franc Swiss. I think price wants to go eventually further down. But let's see how price is going to move from these levels. There's a chance that you may have a deeper retracement, just similar to what I've been mentioning, finding these levels in here that maybe price wants to fill eventually before maybe resuming the move to the downside. So yeah, let's see how price is going to behave in that in those levels, to find opportunities to try to capitalize on this. But yes, this is a nice compression. If you break above it, there's a chance to occur something like this. I think that's it in terms of the currency pairs. Of course, gold, forgot about gold. Gold was one that moved quite similar to the indices during the CPI. Strong move to the upside. During the FOMC, almost a non-event, just spike up and down. Big move to downside, and now we are reacting. We literally reacted from this demand zone that was still fresh, one of the last ones, and curious to see what's going to happen next. Opposite to the many of the other assets, I don't really like anything in here on gold. I could see eventually gold continue slowly to go higher. I don't know if there's any key level in there that can see price holding it down. Maybe this level in here a little bit above it, so creating a new high can be a chance. This is a weekly zone, yeah, maybe a monthly as well. So going a little bit higher, maybe going to 1,836 or 1,833, something like that, with the potential to even go higher. How this looks a lot of compressed on the way down when it was created and price was moving down back in July, June, July. So I wouldn't be surprised if you do continue to create a little bit more of a highs in there on gold before maybe moving down. But yes, curious to see if price respects still these highs or not, or if it just continues to go down. It broke this low, but you respected that level. Yeah, eventually you may feel this range altogether as well. And it's important. It's a good exercise if you want to do it. Find the ranges that maybe price wants to go and fill. Wait for the confirmations that you want to see before maybe looking for those entries, for those moves. It can be done in the higher time frame. It can be done in the lower time frame. Yeah, it depends. Oil is another one that again, fears of recession. There has been the sanctions between the eurozone on ratio oil, not buying barrels above $60. We had the big sell-off when that occurred on the 5th of December. After that, price has been just going down until it finally reacted from that level around $70. And this is a good level. Technically, looking at the chart, this for me is actually a nice, interesting demand zone. It was the beginning of this rally to the upside that we had throughout the year of 2022. The first part of the year of 2022, the second part is the move to the downside. So yes, it's going to be interesting to see how oil is WTI is going to react from here. Is to hold it and now kind of reverse. Should we expecting oil to go higher? Should we expect oil to continue to go down? The situation in China continues as well, trying to reopen. Hopefully they are going to reopen more, and the demand is going to increase in that regard. We'll see what the oil market is going to do. So yeah, keeping an eye on this one as well. It's at the key important level in here. So keep an eye around this is $70 mark, 69. We'll see what's going to happen in there. And yes, I already focused a little bit on crypto, but let's just go there again, just one last time. We broke looking at Ethereum, we actually broke these highs, which was quite good to see, but we didn't really broke this zone in here where actually the highs were reacting from. Maybe you cannot see it on this time frame, or you can see it. So this level in here, this is actually kind of maybe the supply that is holding all this price down. And there you go. Price actually still respected that level. It never really broke it above that level. If it had, it may be what I call it an engulf to the upside, indicating that price wanted to go higher. We did broke above this level, but I wouldn't mind, or I actually wouldn't really mind to see maybe new low. Actually, I mentioned that already a few times. I wouldn't mind for price to go below again one last time, maybe below this double low in here, reacting a little bit closer to this level before maybe having the final turn, right? So you already broke this level. Just go one more time in there. Take this double low from here and then reverse. I wouldn't mind at all to see that happening on the Ethereum. Yeah, if that's the intention, if the intention is to actually then continue to go higher, just take one more time. Just go down one last time and fake out that double low before moving upwards. In the short term, of course, pay attention to this level. For maybe some shorts, continuation to downside. Let's see if price does indeed respect that or not. Bitcoin, it reacted from a really nice supply in there on the left side. This 4-hour time frame in here, aligning this previous level of support resistance. It goes down. Next target is in here. I don't think price has reached. It touched the top of it, not exactly the demand itself. Yeah, the base of it has been touched. Go down a little bit more before maybe moving. To have this demand zone, I do like this demand, so I wouldn't be surprised, or I would like to see price actually going below this low, maybe touching this demand before maybe continue to go higher. Now I went with this low somewhere in here at around 15,816. Yeah, that for me could be a good level to look for, maybe to look for a long on Bitcoin. Anyways, price just wants to continue and break completely these lows and continue the bearish move that has been going on for during this 2022. So let's see where this crypto, Bitcoin and Ethereum, are going to finish by the end of the year. These ones, they may have different type of volatility going on during this period, so we'll see. With that, with this, I'm going to conclude the weekly analysis. Thank you for watching, guys, and I'm going to stop recording. And you are free to ask any questions that you may have. Thank you very much for watching. Happy Christmas for everyone. Happy holiday season. If you don't talk before that. Thank you, guys.